NEPA. No, we can finish, just so that we can finish on time. I don't want the training to be long. Yeah, so we'll just keep our questions. Please note down every single question you have. Note down every single question you have. We'll take the question at the end of the class. I have here the mentor Ismail, our team lead. I also have some coaches here in the group. There is Coach Amaka, Slick Lady, that is also good with Smartmonics. So during the question and answer, they will be available to also support with any question or answer. So let us go right in. Let me leave this on in case they take the note again. All right, so now, what is this? Let me share my screen so we go to the scanner. Yes, so please let's pay keen attention. I'm not going to start from how do we access the scanner, because we are not talking to we are talking to people within the academy already. So of course, when you log in, you have where you find the scanner here. And out of all the scanners here, the one we choose is the Smartmonics scanner. Now, when you come, you can set up your time. I'm on the UTC +1 for Lagos, Nigeria. So it covers every city in Nigeria. So first of all, I want to set up my chart. Yeah. And here, okay, let me quickly look at it now. The Smartmonics scanner can be used for a different range of assets. It actually works for all markets. It works for the crypto digital currency. So you come here, select, and then you come to where you have symbols and choose the one of your choice. So Bitcoin, Ethereum, and the rest. It also works for the Forex market, which is the currency pairs, which is USD JPY, GBP USD, and the likes. And then you also have the indices like US 30, US 500, and then also for the energy market, energy and commodities, energy like US oil, UK oil, gold, silver, platinum, and the like. So Smartmonics works for all scanners. And now the default, when you click on Smartmonics, the default time frame you're going to see is a 15 minutes time frame. And just a bit of clue, when you open any of the scanners, the default time frame that you see on this left side of this screen is actually the default. That's what the developer intended, the time frame, the developer intended the scanner should be used for. So for Smartmonics, a minimum of 15 minutes is what the time frame of the scanner was designed for. So I'm going to just collapse this place. We're clicking this yellow back button so I can have enough space on my scanner. So now what exactly is this Smartmonics strategy? Everyone, Smartmonics. Okay, I'm just going to go through the features as seen on the screen, and as I just note them, I'll point them out as much as possible so that we can see them. Let me go up here. Yes. Okay, so now Smartmonics actually highlights key levels of supply, key levels of demand in the market, and it's a scanner that allows you to identify where institutional trading activities occur within the markets, and it actually allows you to position yourself on the right side of the market, all the time. Yeah, so I learned that like there are 10 financial institutions in this world that actually control at least 60% of the money circulating in the Forex market. So when these people make, big moves, when they move at all in the market, they leave footprints behind because you can't make such big moves and not be visible in the market. So very important. Now, the supply and demand zones in the market, where the supply and demand zones, you always see on the scanner. You always see on the scanner. Please, can one person just volunteer to be giving me vocal feedback when I ask something so that I know to confirm what every other person can see? So when we talk about the supply and demand zone in the market, the red horizontal bar here is actually the supply zone. And then the green, horizontal bar here is actually the demand zone. And one of the things about this scanner is that the color-coded feature allows you to understand easily how to use the scanner. And while I'm explaining all this, in all the explanations I'm giving you is to enable you understand what went into putting the strategy together. And your job is simply to be able to pick out, what you're going to take from the market, because a lot of the things, everything is done for you up to 90% or 95%. The rest is you just knowing what to take to your MT4, MT5, to trade. So these supply zones, they are also like resistance, and then the demand zones are like floors. Now, when you want to, a resistance, just let's put it in simple terms, is like a ceiling. And then the floor, the supply is like, the floor. So when you throw a ball, up to the ceiling, what happens? Will that ball go up and down? Please, you can reply in the chat box. When you throw a ball on the ceiling, will that ball go up and down? Will it come down? When you throw it up to the ceiling, will the ball come down? Yes or no? Yes or no? I want to see our responses. Okay, yes, the ball will come down. And what also happens when you throw the ball on the floor? Is that ball going to bounce back up? Yes or no? Will the ball bounce back up? All right, yes, it will bounce back up. But then there are exceptions. There are times when you throw a ball with so much force that it can break the ceiling. It can break the ceiling. But then even when it breaks through the ceiling and goes up in the air, at some point it will still come down, because nothing moves in a single direction, perpetually. And the same thing, there's a way that you throw a ball with so much force, depending also on the weight of the ball, you throw it with so much force and it hits the ground and cracks the ground. In some instance, let's say you're living on the third floor and you throw that kind of ball, it might hit with such velocity, it can hit and break through, into your neighbor's house, and then maybe lands. And also the same thing happens, in this market. So anywhere you see this red zone is like a ceiling in the market, and then the green zone is like a floor in the market. Now, the different time frames, 15 minutes, 30 minutes, 4 hours, daily, they all have their floors and their ceilings. So I just needed to explain that, to you. Now, one of the things is that Smartmonics, as a scanner and as a strategy, actually allows us to be able to, it actually identifies for us key levels in the market where price is accumulating. Now, what is accumulation? Accumulation is simply a consolidation. It's simply when the market is, the market moves in, let me say, 2 directions, basically. It goes up, like you can see from here. You can see from here, where is my, it goes up, and then, the market also comes down. The market goes up, it goes up, and then the market also comes down. So you can see there bullish movements and then bearish movements. When the market goes up, we say that the market is buying or the market is going bullish, and then when the market goes down, we say the market is selling or the market is going, bearish. So, but then there's a point where you cannot see a clear movement in the market. The market consolidates at certain points. It's neither moving up nor moving down. So at that point, let me look for a lower time frame. At that point, consolidation is sideways movement. Is just, moving like that to the side. These are just basic things, I just need to explain it to us. So when the market is moving at a side, is accumulating, and that's consolidation. It simply means that at that zone, the market is simply piling up orders, either your buy sell orders within the zone, because in the forex market, basically what the orders are buy sell, so Smartmonics is able to identify those zones for you. Now, the Smartmonics strategy is a 3-step strategy. Please pay attention. Now, is a 3-step strategy, and 50% of this strategy simply involves you trading in the right zone. That's the 50% of it is you being in the right zone. Now, how do you know the right zone? The scanner helps you find the right zone. Please follow my train of thought. I'm building up something. The scanner helps you to find the right zone. Now, the supply zone is marked in this translucent, red. Almost transparent. I didn't want to say light red. It's almost transparent. This is a red here that you can see. That's the supply.
I was slacking now.
So that's a red, horizontal bar that you can see here. Let me just mark it out so that we can know it. This is, this zone like this is red, translucent. That's a supply zone. And then when you come here as well, where you see this green bar, long stretches like this, that's the demand zone. So it's very easy for you to pick out, and the scanner picks that out for you. And then another thing is that the scanner, this Smartmonics scanner, will help you identify the liquidity, the buy side and the sell side liquidity in the market. Now, what is liquidity? Liquidity is simply money. In very layman terms, it's simply money. Liquidity is simply the buy and sell orders that you have at different, price levels in the market. So the scanner helps you identify where you find buy side liquidity, sell side liquidity. Now, the buy side liquidity and the sell side liquidity are always found together. The buy side and sell side liquidity are always found together. And this is, is this red, this a block, a red bar and a green bar. Now, the green bar is a buy side liquidity. The red bar is a sell side liquidity. I'm using the name, and then also using the color. The green bar is always on the red bar. The green bar, anywhere you find it, is always on the red bar. You see here, it's always on the red bar, not always, the green bar, always on the red bar. The red bar is underneath the green bar. So now, the green bar represents buy side liquidity. I've said that, this green bar. And then the red bar, horizontal bar, represents the sell side liquidity. Now, you will always find, this in a supply zone. That's this green and red bar together. You always find them in a supply zone. The supply zone is that red zone, above there, or you always find them in a demand zone. The demand zone is this green bar below here. So you always find them. And when you always find the two most recent supply and demand zone on the charts. You can't see the one in the past. The two most recent are the ones, that you find. Now, anywhere you find this liquidity present, it is simply because the market will make a move. Where you see money, the market will move where you see money. So that is one of the features, that this smart money scanner, has. The main feature of it, one of these, I told you, is a 3-step strategy. So the first one is this, demand and supply zone. Now, the second one is the harmonic pattern. Now, you can see this thing that looks like the wings of a butterfly. Here like this, from this point, this point, this point. Okay, this pattern is actually the butterfly pattern. I didn't even say it before I said that. Yeah, it actually looks like a butterfly. Some look like the ABCD looks like maybe a rectangle that is skewed and all. Now, the harmonic pattern is the second next major part of this Smartmonics strategy. Now, harmonic patterns are very complicated mathematical patterns, but you don't have to do that calculation. Yeah. And because, anything, the universe actually revolves around mathematics, physics and all. And of course, anything you find numbers in, numbers do not lie. Now, this harmonic pattern actually creates another layer of precision and accuracy in this Smartmonics strategy. You see here, don't bother yourself about, unless you want to, become a deep technical. This thing is for beginners, very basic, just to show you what actually went into, bringing up the whole thing. Why I'm explaining all these things to you is to give you the confidence to know why when you see these entries here on the Smart Money Scanner, you should take it. Which one should you take? Which one should you not take? So now you have this pattern like this, and once you see this harmonics pattern, another confirmation, once you always see it, completing. When you see it completing in a zone, like this, it's actually, giving you a level of, accuracy. And now, one thing I need to let you know is that when the harmonics pattern, actually shows up like this, in a zone like this one, this is actually a sell trade, a sell limit trade. When the harmonic pattern shows up in a sell zone like this, or it shows up in a buy zone, in the red zone for a sell, in the green zone for a buy, that is actually a Smartmonics idea. That's a Smartmonics trade idea. There are trade ideas that are on the Smartmonics scanner. They are valid and you take them, make money. But what makes it a Smartmonics idea is when you merge, the supply and demand zone that I've explained to you, and then, the harmonics pattern. Smart money concepts, a concept of trading, from demand and supply zone, and then, harmonics. So Smartmonics, that's the strategy. So it simply means that this scanner is capable of generating trade entries that are valid, but what makes it Smartmonics trade idea is when that trade entry has the harmonics pattern, in it. So that's a second part of it. Now the third major part of this Smartmonics, please don't write Mrs. Obi. Please don't write on my screen, please. Thank you. Yeah, so the third major part of, this strategy, the smart money strategy, is a confirmation or rejection candles. The confirmation and or rejection candles. Let me expand this so that we can easily see. Okay, yeah. So this is, you can see here, this is the last part of the strategy. I said is a
Sorry, Coach Mark.
Yeah.
Coach Mark, I want to mute everybody. So you now unmute yourself.
Okay, please. Okay. Okay. So I've mentioned.
Close my volume and leave that place.
What? Sorry, 1 minute. Good match.
Okay. Yeah. Okay. Now, I've mentioned that the first part of this three-step strategy, the first part is the supply and demand zone, which I've explained to us. The second part is the harmonics pattern, which I've explained to us. And then the third part is now this confirmation or rejection candles. Now, this is the last part. What's a rejection candle? Now, when a market, this like now, this is this red zone here. This red zone here is actually a sell zone. This market was going up from this point. From this point here, this market was going up on a bullish move. And then you don't want to enter this market when you're not too sure of whether it's going to maintain the bullish direction or not, or maybe you just jump into a sell, not knowing whether it will continue moving in a bullish direction. So what happens? This is a sell zone. How do you now confirm that you can take a trade at this point? Rejection candles. Now, this rejection candle, is simply showing that the market is going to respect this zone. And the market that was going bullish is going to start reversing to sell. The confirmation or rejection candle, which is this thing in yellow here that you're seeing, there are different types, is simply to show that the market will respect that zone. So you see it either at the red zone for sell, or you see it at the green zone for a buy. So now, if this market, this one was going bullish and then respected the zone and started moving, so the market started selling. And then the same thing, if it were the market was selling and it gets into a green zone, that's a buy zone like this, and then a confirmation candle pops up in the buy zone, it's simply showing that the market is going to respect that buy zone and it will stop moving bearish downwards and it will start moving back up. So that is it. Now, there are different types of rejection candles. Now, there's the entry candles, which is usually like in black, and also you also have you have the type 1 candle, which is yellow. Type 2 is orange. Type 3 is purple. I have a bit of challenge with certain colors. So this one looks looks more like orange to me. It looks more like orange to me. It might look like yellow to some people, but this is actually orange. Now, these candles are not just they are not just candles. If you're someone who understands candlestick patterns, you understand things about moving averages, you understand volatility, and all those things, they are incorporated into the rejection candle that you find on the Smartmonics scanner. Now, another thing I want you to note, here is, this light is entering my eye. Another thing I want you to note here is that the candles on Smartmonics also have their color coded. They are color coded. How are they color coded? Now, let me show you something. If you place your cursor on this EMA line, the EMA line, is this one, that has its green when the market is bullish and is red when the market is bearish. When you place your cursor on that line, it is going to display, this color-coded patterns. When the trend, it shows you at this point, it's showing you, it's called OTT, Optimized Trend Tracker. At this point, it's showing you the structure of the market. You know that if I remove this, you know that you're seeing green, red, buy, sell, but you can click this, just put your cursor there, hover it over that line, and then you can see the structure and see that this market is actually bullish when you're seeing, all green there, and then it's bearish when you're seeing all red. Now, you also need to note that now these candles, when for the bullish or buy or upward momentum, you're going to notice that the candles have two tones. When the market is actually bullish, the candle is actually a deeper shade of green. The bullish candles are a deeper shade of green. And then when the market structure is changing from bullish to bearish, you see those lighter green colored candles, to show you that the structure of the market is actually changing. So let's go to the bearish at the same time. So now when you click there, when you click on the this EMA here, the green line that changes, so it changes to red. So when you click, you notice the structure of the market at this point is actually bearish. The deeper red candles are showing that the structure is actually bearish. And you see the lighter red will start popping up when the structure of the market is changing from, bearish, to bullish. So this is actually, part of the Smartmonics system. So at a glance, instead of okay, I don't know what, at a glance, you can actually click and then you see what exactly the market is doing. So now, the question is, with all these things, in place now, how do we know a valid idea? And how do we know what to take, what not to take? Very simple. Step one, the price. This line here you're seeing here, I'll still explain, this. I'll get to that. But you see where you have POI, that's point of interest. The price has to touch the zone. The price has to touch the zone, and then there can be a harmonic sign or not, so that you will not say that if I don't see a harmonic sign, I won't take. You miss out on opportunities. When you see a trade entry like this, the price has to be in the red zone for a sell or in the green zone for a buy. So, and then another thing too is that you have to wait for the rejection candle of that zone. Very important. You have to wait for the rejection candle of that zone. This orange candle here is the rejection candle of that zone. Is the rejection candle of that zone. And then why you have to wait? Now, whenever, in a lot of cases, let me look for the a higher time frame where I saw that rejection candle. When you see on a rejection candle, a lot of times when you see like in this one is an orange rejection candle, this on the daily time frame for a buy. Now you can see that the price is actually in the zone. There is a check mark. It's supposed to be a tick, but recently they upgraded some of those things. So the tick now shows as this spot here. Right under that candle, if it's a buy, right under that the rejection candle, there is this dot that you see that actually for buy, you always see it as green right under that rejection candle, which is this one, so you see it there, and that check mark is actually confirming, that zone. So it's actually like a zone check, confirming that, look, that zone is actually, valid, and then you're safe. Safe does not mean guaranteed. Nothing is guaranteed in the market, So it means that you're actually safer. Let me use the word safer. You're actually safer to look for entries in that zone. So this is this in a buy, in a sell trade idea, usually see it as on the, particularly on the rejection candle, usually just would see, that dot, the tick there. So that is another thing these are things that you look out for. Now, another thing too that I need you to know is that all these things that are happening, you are not they are happening automatically, so that someone won't say, I'll go and carry tick and put on. No, you're not the one carrying the tick to put on it. The algorithm of this scanner is actually doing all of that for you. So now, as soon as this rejection candle plots here, the next thing is that you'll have to, it's going to give you a pullback entry. It's going to give you a pullback entry. Look at what happened. Just the market is not rushing. Wait for this candle. It's going to pull back. Like you see here, it came down and then it actually went back. It went back and that entry activated. Why? It has to go to pick up, there are still orders. There is an imbalance in that area. There's an imbalance in that area. So the market will go and look for the orders that were not filled out, when that movement happened. It's going to go back and then pick those orders and start selling. And you can see it here. The rejection candle plotted, it made an impulsive movement, and then it went back, and activated that entry. And because this is a sell idea, what happened? It started, selling. It started selling. Very important. So what do you do at this point? At this point, you're going to see when this rejection candle pulls, comes up. For those people here that are familiar with the Smartmonics scanner and have been using it, we have seen it in real time when the rejection candles popped up, and then the next thing, this idea, these parameters are flashing in. They are flashing in and out until they become stable. Now, you're going to, once this, for Smartmonics, you always see one point of interest or one entry, and then you see one stop loss, and then 5 exit points or TPs. 5 exit points or TPs. At this point, when you've looked at it, rejection candle, the market, is in a zone, and all, you see a Smartmonics, so that you see Smartmonics added confirmation, but even without the harmonics pattern, added confirmation, even without the harmonics pattern, you see that it's in a zone, the zone is valid, and then you carry these parameters and you take to your MT4 or MT5 and impute the parameters. We've taught severally how to take trades on your MT4, MT5. Now, the thing is, when you see this rejection candle, maybe you're just you just opened the scanner and you came up, and then you see the rejection candle, and then this thing plots. It is, it's at that time. That's why it's giving you the instruction that it is a sell limit. So you go and place your entry on your MT5 or MT4. POI is your entry. POI is point of interest, is your entry, and you carry the figure that is there, the price that is there. So your entry price will be 146.01. And it tells you in bracket, the instruction for this trade is set a sell limit. Set a sell limit. So you go set a sell limit, and then you put your invalidation. You put your stop loss, the number in red. You can see that the entry is in white with instructions, and then the stop loss or invalidation is in red with instructions, and then TP1, TP2, TP3, TP4, TP5 is there. The prices are there. And we typically always say that, plan and go out at maybe TP1 or 2. Now, the thing too about this price parameters on Smartmonics is that it gives you your invalidate your this thing, your stop loss in pips. It puts it there for you and takes away the guessing, and it also puts your TP in pips. Now, if you're taking trades on the daily or 4-hour or 2-hour time frame, of course, you can see that the stop loss in pips is actually higher. If you move down to maybe the 30 minutes time frame, let me see. If you move down to lower time frames, why a lot of people like, fantastic. This one is 3 minutes. I don't encourage taking trades on 3 minutes, but look at this. On this, on the lower time frames from even 1 hour, downwards, the invalidation or the SL is usually not more than 27 pips. 1 hour will give you typically like 25, 27 pips, and then the 15, 30 minutes will give you typically like, let's say sometimes between 10 to 18, 19 pips, 15, 30 minutes, like that, depending on what you're trading. And then you see the various TP levels there. So let me go back to that 4-hour so that is Smartmonics for you. So we always advise, go for TP2, if you're taking on this 4-hour, if you're a swing trader and all, you know where you target. So that is it. And please, when maybe the trade ideas, let's learn to be proactive. Someone shares a trade idea with you, a Smartmonics trade idea with you that carries in bracket sell limit, and the market has not gotten to that price and all, and you're still asking, is it a sell limit or not? Please let it stop after today. Let it stop after today, okay? Now, we know we are learning. So now, another thing too is that the between point of interest and your TP1, will give you, between TP1 is 1-to-1 risk to reward. It's simply your TP1, it simply means that your whatever you're risking, as stop loss or invalidation is what equivalent of what your TP1 will be. So let's assume, like this one, let's assume that this is 89 pips. Let's just say this is $9 or $10. Let's assume your stop loss here is $10. 1-to-1 risk reward means that when this trade hits your TP1, it's going to give you $10 back. If it hits your TP2, it will give you $20. That's twice of your SL. Hits TP3, TP3 is 3 times of your SL, $30, and then TP4 will be 4 times, TP5 will be 5 times. Yes, so that is it. Please, you can stick to TP2, TP3, even though in a lot of instances, Smartmonics trade ideas always hit TP5, but then you don't want to be in the market, all the time. So now there are other features of the Smartmonics that I'll show us. You have here, let me reduce this so you see. I love looking at these things, these Bollinger Bands. They are so beautiful. So the other features are what we call the VWAPs. The VWAPs band. You see, this thing that looks like, what would I call it? Whether a cloud or a web and all around that is covering, the market and its movements. They are called VWAPs. They are kind of Bollinger Bands and all. So it was also built into the scanner, and the strategy behind Smartmonics ensures that you are always taking your a trade idea is actually generated on the extreme highs of this VWAPs band, and then that's for a sell, and then a buy idea is generated at the extreme, of this VWAPs. You can see that for this market here. Let me expand it back. You can see that for this market here, for this trade idea, this current high points like this, if here as well, a trade idea must have played out here. It will not give you a trade idea, at this point. It won't give you a trade idea at this point. But you see these high points, these are the highest points for this one, a trade idea, popped up. And then another thing that is also built into this is the session reversals. Now, those session reversals, you see them on the lower time frame, from 15 minutes. You see it from 15 minutes, and also these are the session reversals are these vertical color-coded columns here, with the green representing the Asian session, the red representing the London session, and then the blue representing the New York session. Now, why are these things important? Now, you can actually see what happened in the market, because in the markets, in the trading, you have, a period of accumulation, you have a period of, distribution, as well, so let's see, and then it reverses. So let's see, okay, this USD JPY. Let's look at the 3 most recent sessions, right? Let's take a look. Now, in the 3 most recent sessions, you can look at it and see, and it can give you, allow you hazard a guess as to what may likely happen, whether the session will continue or the trend will continue, or you have, a trend reversal. The green here is the Asian session, and in the Asian session, you can see that the market actually started, buying. It bought, and then went to the London session. In the London session, you had a lot of consolidation. Consolidation, and then what happened in the New York session, which is the blue column here, you had a continuation of, that uptrend, a continuation of, and if you really want to look at it, if I trade this pair USD JPY, if you really look at it, USD JPY has, for several days been ranging. Look at the entire consolidation that, happened for a number of days on USD JPY, and also you see it there, and then the next thing it broke out. What happened here? I told you that when accumulation is happening, in the market, that orders orders are being placed in the market. Orders are being placed in the market. And what happened? This is actually from this very impulsive bullish move. You can actually tell that the market makers, those that an institutional trading actually happened, at this zone. Like I told you earlier, that these big wigs will always leave, their footprints in the market. So the market bought, and then there are orders that have been placed. If you check on the daily time frame, there are still orders. That were in this zone. There are orders in this zone that needed to be picked up. These orders were picked up, and on the daily time frame, you actually have a buy idea. Someone might ask, is it not conflicting that I'm seeing a buy, on the daily time frame, and then on 4 hours, a lower time frame, I'm seeing a sell? Now, let me show you something. Like I said, these guys, you want to place yourself on the right side of the move, in the market. So there are zones here. There are orders that are pending here that must be, fulfilled. So this move now, impulsive buy move, is to go back to this zone and pick up these orders. And if you check this market from this point of entry, point of interest or entry point, when it moves down and moves down to the last TP point, 1 to 5 RR, the number you have here is 141.55. When you come to the daily, now that 141.55 will not even, the invalidation for this daily time frame is still, a few pips, a few number of pips below. So it will come and clear up, these orders again, and then it will continue. From the daily, that you can see that the like the sentiments of this market, the trend of this market, USD is on a bullish trend. But then the market will always, it's moving in like waves. It will always come back, pick up orders, clear people's stops and losses, and then move. So the scanner actually helps you to eliminate a lot of those guesswork that will be happening, and you can take your trade. So another thing that you can also see, like additional features, that could really maybe help. Let me just say, some people ask, like all these dots, these white dots, that you see on candles. Those white dots simply show where you have high volume levels in the market and all. So now, does I sent a trade idea, and someone said, oh no, the market has already moved that zone. That this was for Ethereum. And then for that trade, even though the market had come, that trade had moved, but there is a rule on Smartmonics that I want to share. If you notice, let me even go back. Okay, like on this buy here, how many times has this market come back from the point where the rejection candle was called? How many times has this market moved and come back? It has moved and hit TP2. It came back to POI. It moved and hit TP1. It came back to POI. It moved and hit, in between TP1 and 2. It came back, and then another move. Now, there is a 5 candle mitigation for every zone, for each potential trade idea. So long as 5 candles do not close, below that zone, below a zone like this for a buy, or above a zone like this for a sell. So long as 5 candles do not close below that zone for a buy or above that zone for a sell, that zone is valid. That zone is valid. What makes the zone no longer valid is if, that zone becomes invalidated. We've actually seen a situation where when it trades, Smartmonics called the entire time frame and all, like the USD card of day, was it yesterday, just right in, I was watching it and knowing, okay, look, I said it's gonna hit, invalidation, and then it hits, and then that trade idea actually wiped off, smart money. So it means that you can profit off, a particular trade idea over and over again until that trade idea is invalidated. Now, let me conclude with, this lower part of the smart money scanner. This is the down here. This is the oscillator, down here, and it's also color coded. You have on the top of it, the red zone, and then on the bottom of it, the green zone. Now, if you look at something, let me bring a line. Let me put a line here so that our eyes will be easier for us to follow. Now you see, this blue candle at the bottom. This blue candle at the bottom here, it corresponds with, this, sorry, I said blue candle, green candle. This green candle at the bottom, sometimes it looks like teal blue, corresponds with this green candle on top, this bullish candle on top. So this market came into the buy region, and it's confirming, the oscillator is actually confirming that, it's a valid zone, is validating the trade idea as well, because it's showing you, that the market is also ready to buy when it comes down to this green zone. So you see the movement. It moved from the green zone, and then when it started selling, it was overbought and it started selling. So that's how this oscillator moves, up, down, like that. So it's an additional confirmation for you. So when you are taking buys, you take your buys and check, also that the oscillator has the candle, at the green zone. And then when you're taking your sell, it gives you, it's higher probability trade for you. It gives you more confidence in that trade. And if the candle, if it's a sell, you want this candle to be close, closer to the red zone, and you know that it will have a sell movement. Now, when a candle is in between like this, on this time frame, this daily time frame, I will not enter this trade again. I will not enter this trade again. It has gone, almost halfway. So I'll either want to wait for it to complete the move and come back if I'm trading on this daily. So if you're trading also on the lower time frame, you also check and confirm. You don't want to take a sell. You don't want to take a sell when the oscillator is in this green zone, when this line here is in the green zone, and you don't want to take a buy when it's already in the red zone. And then another thing that you see here, let me go on the lower time frame. I think I saw it on the lower time frame. What just happened? Why is my chart? Come on. Okay, another thing that you also want to watch out for in this market. Another thing, okay, let me quickly say, when you open Smartmonics and your chart collapses, you have to come to the price bar and keep expanding, the chart. But I find that to be very to be a longer way of doing it. So once I select the assets that I want to trade, I simply just come to the price bar and wait. the moment the chart shows up, I'll just do like I'm expanding it, and then so it doesn't collapse. My network is a bit slow. Sorry guys for the pause. I'm just trying to refresh. Yeah. Okay. So I just hold the price bar and expand it so it doesn't collapse on me. Now, what I wanted to show us, was, an additional feature of Smartmonics is, the divergence. You have the bullish divergence, bearish divergence. You see this D on the oscillator, this data is on the oscillator, and then it's circled, is actually the bearish divergence. Let me see if there is a bullish one. What did I touch now? Okay. Let me see. The bullish divergence, I don't know if you've noticed it before. You see it in D, but then it's circled in blue. Now, the divergence, in very simple terms, is actually like a warning sign that the trend is about to change. That's simply what divergence is. So now you have a bearish divergence when the market was trending bullish. The market was trending bullish, and the moment divergence pops up in the form of this D here, is telling you that the market is changing, its direction. And if you can see here, when it popped up, it started having, these cells, even though it's not really too significant like that. So the same thing when you see, let me see if I can spot a bullish divergence on the just to show us. Let me see if I can spot any. Let me look for a lower time frame, 15 minutes. 15 minutes. If I don't see it, we'll leave it, but I just wanted it to be in this video. All right. Yeah. So
You can you try to stretch the oscillatory part? Yes, just stretch the price. Yes.
okay.
Stretch it like that. So you now move it downward, you see, push it upward, you see, it should be there. It should be.
Okay. Oh, okay. Okay. Let me see. It doesn't hide. It doesn't hide that much. Let me quickly look. Let me check quickly GU and see if we'll find, because GU actually had a bit of an impulsive movement. So let me check if we'll spot it on GU. Okay. It's not, I can't find it. I can't find it here. I don't, I think I saw it this evening on USD Let me just check if it's on the 4 hours, because I saw it somewhere. So, but just note that the same way you see that, aha, fantastic, I knew I saw it. Okay, you see this D here? You see this D here? Yeah, that's also, now this market, if you check, this market was selling. This market was selling, and you see the sell happening there. You see the sell happening there. So now divergence at this point was warning that the market is about to change. So it's something that you can also, if you see, and then every other thing aligns, then it's additional confirmation for you. So To recap what I've just said, now everything I've shown you today is very simple. The very simple steps, for you to take, a trade on Smartmonics. When you come, please, you need to see that this has popped up. You need to see that this has popped up. You can see someone that is really like a pro at trading Forex can see this, and they already know the confirmations and decide to say, okay, I'm going to sell from here. But please don't do that. Don't do that. Always make sure that you first of all see, that, these trade parameters have been called out, and then you now come and look for, check whether it's a valid idea, check that the price is actually in the zone. Have shown you on the 4-hour and on the daily, how to confirm that. You see that, these red and green liquidity bars are there for the buy and sell side liquidity. They are there, so when you see that the price is in that zone, when you see that the price is actually in the zone where you have the upper side of the VWAPs, like here, so it's giving you confidence that it's a good entry point. Price has to be touching the zone, and you might or might not see the harmonics pattern, but when you see the harmonics pattern, is actually another confirmation for you. And in some instances, you see a zone check, right above the confirmation candle, and then you also see the confirmation candle. It can be white, it can be black, it can be yellow or orange. It can be, yellow, purple, and all. I've not seen purple yet. And then you also have to ensure, I've never seen any Smartmonics price entry parameters that does not have this complete one stop loss, one entry, and 5 take profit points. So you confirm that these are there, and then you can go and take once you see the confirmation candle, you can go and place a sell limit on your broker, and then you see that, put all the parameters, your stop loss, which is, please, invalidation is stop loss. I've mentioned it a few times. POI is your entry. This is the price you take to Smartmonics and put as your entry or your sell limit. The red here, invalidation, is your stop loss. You carry that price, put on your MT4, MT5, and then the green bars with the 1 to 2, 1 to 4 RR, 1 to 5 RR, you choose your exit points. And then, of course, you have to learn trade management. When your trade is in blue, we always say it's on you. So you shouldn't allow a winning trade to become a losing trade. So very important, you look at these things, and then boom, you can go and put take your trades. Go and take your trades. So it's really as as simple as that. And we have a strategy in this team where when you come into Jifu, you can follow the educators. We have select educators you follow the educators, and take trades from the educators, and then use your demo to practice how to take trades. Practice how to take trades from Smartmonics. Since I started using Smartmonics, I can count the number of times I came to Trendwave. I only see Trendwave when probably at the US 30 session, and you're using it, so it's my preferred scanner. So I think at this point, we've come to the end of the class, and I hope you've learned something. We can take questions now. And so I think I've already talked about, I don't know whether I mentioned it. Now, I think I mentioned it, that if you're a swing trader, the time frames, I talked about it, but let me just recap. If you're a swing trader, you want to be taking trades on the 4-hour time frame. If you're an intraday trader, you want to take your trade ideas from the 1-hour, 2-hour time frame. And then if you are a scalper, you can take from 15, 30 minutes. Now, let me tell you, the person who designed this scanner is adverse to scalping. He does not like scalping, at all. So Smartmonics was not designed for scalping. We have Supernova that is a very good scanner for scalping, so 15, 30 minutes is the closest thing you can find, to scalping and all. So because his own idea is, to use the harmonics and to fuse the harmonics and the zone to zone trading, not for scalping. So that's, yeah. So let me take, you're welcome, everyone.
Thank you very much, Coach Marge. Thank you so much. Really appreciate the time with us. And thank you for the rules and the advices and all that. So if you have any question, you can ask now. If not, you can post it on the group. Coach Marge will attend to your questions. Tomorrow we'll be having another session by another coach as well on the same topic. So you can have added, what do you call it now? View on, no, not that, added explanation,
Yeah.
and the clarity also, So for those of you who are here tonight, try and try this out. Open your system or your phone, go check it out, take it on your demo. Take one thing, at least one trade tonight on your demo. Maybe when the market opens after it closes, So at least that's how you learn. If you don't practice, it will never stick, That's why you need to practice almost immediately. Yeah. Okay, someone have a question for you. How do you bold the candle? What does that mean? That's how do you bold the candle? That's the question. But I'm trying to get. Can you ask this question in another way? Let me understand what you're saying. Or do you understand? How do you bold the candle?
No, oh, okay. I don't get. Is it to expand the candle?
Okay.
Okay, if you want to
Said
expand,
yes.
okay, said yes. If you want to expand the candle, if you come to the bottom of this, your chart here, you see minus plus, and then you see this other arrows like to and fro, and then this one is you can reset the chart view here, and then this one you scroll to the right, scroll to the left, and this one is you zoom in. When you zoom in, you
Hmm.
expand the candles. You expand the candles when you zoom in. When you click on that zoom in, you expand the candles. But when you zoom out, you want to zoom out, you can do use the minus sign, use the plus sign to expand the candles, use the minus sign to reduce and shrink the charts. Because sometimes I look at this, it looks like a lady that is dancing using a green and red scarf and dancing to ballet or something. So I always love having this picturesque view of market activity, and then you can now zoom in. You can zoom in by clicking plus. The plus button is at the bottom of the screen. And then if you come to the price charts here, you can like you move your finger on your mouse. I said on your mouse, on your touch pad on your laptop, and then move it up. The candles expand as well. And then you want to shrink it, you do the same. You close your fingers together and shrink it. Okay, let me see. Another question. Please, are we getting the
All right. Another question here. For the rejection candle, why does the sell trade do not have the red tick like we saw in the buy scenario?
I noticed that sometimes I don't see that on all, and I remember in one of those training sessions we had with Manny Quinones, he had said he was going to work on that because before now it was not showing, but the recent set of additions that were made, it also started showing. The zone rejection candles started showing. So I think it's something they'll have to fix.
Okay, I think that's about the questions. Thank you very much, Coach Marge.
You're
Uh,
welcome, everyone.
they're all saying thank you too. So thank you so much. God
You're
bless you.
welcome, everyone.
Good night, everyone. Take
Good
a nice
night.
sleep. Go try it out. Thank you.